I can't think of another business in the world where you don't really know what you have, you don't know how much it's going to cost to produce it, and you're not really sure what price you can sell it at. There was a lot of things I didn't know, and I learned a lot of it the hard way. And there were a few things I wish someone had taken the time to tell me before I lost a lot of money. So there's basically two ways to play this, maybe three.
Hello and welcome to Crux Investor. First of all, thanks very much for watching this video. If you like it, please give us a thumbs up. It would be appreciated. And do leave your comments below. It helps us understand the sorts of questions you think we should be asking, how you think we've done, and of course, how the interviewee did. Plus, you can also listen to this as a podcast, and you can read about it on cruxinvestor.com, either as an article or a transcription. And of course, if you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And for more videos like this one, click the notification bell. We spoke earlier today to Jamie Keech. He is the resource insider. He's a very well-known market commentator. Quite like the guy, former mining engineer. Got some very strong views about the market. So we thought we'd talk about a few of those topics, being corporate structuring, private placement, inefficiencies in the marketplace, what retail investors should avoid like the plague, why he hates newsletter writers, and the cult of the personality. Pretty interesting stuff. He doesn't hold back, so take a look in the description below at some of the other things that we talk about. If you like any of those, click on the timestamp and I'll jump you to that part of the video, but enjoy what Jamie has to say. Hey Jamie, how you doing, sir?
I'm good, Matt. How are you?
Yeah, not bad, not bad. So we caught up a couple of weeks ago. We thought it might be a good idea for us to have a little chat online. Welcome to the show.
No, I've been looking forward to it. I was disappointed when you had camera issues last week and we had to postpone. I was like sitting here, I was all set up, ready to go, had my mugs ready, and then no camera.
You don't have the. You don't. I know. You don't have the right mug. We're gonna have to send you the right mug.
Yeah.
Okay.
Is there like a Crux mug maybe that I can some branded?
You don't know about the Crux mug?
We're looking for sponsorship for our podcast, so I'm more than happy to hold a Crux mug for a reasonable fee, I think.
That's the kind of commercial attitude I love. So how have things been this week? Are things kind of picking up in Vancouver, I'm hearing? People getting back to work?
Things are good. It's only Monday morning. In terms of the market, my job is to look at private mining deals, private placements, and they've been going ballistic over the last, I don't know, what would you say, 6 to 8 weeks or so. In terms of life in Vancouver, things have kind of picked up. I wouldn't say business as usual, but it's getting pretty close. You can go to a restaurant, you can grab a beer. I'm back in the office most days now, and some of my colleagues are in there. So things are eking back to normal. How about in the UK? Is it
Well,
pretty restrictive?
I think we're one of the worst performing countries in the world when it comes to how we've dealt with COVID-19 for a multitude of reasons, as my son would argue with me, but that is nevertheless the case. We're not yet out socializing or visiting other people's homes. We're certainly not inside. We're allowed to wave at them from outside, I think. It's a bit rubbish. Hey, well, Jamie, let's get into this because I'm excited. We talked a couple of weeks ago. You're obviously a very well connected, bright guy. You're a mining engineer. You also run something called Resource Insider. People can look at that at resource-insider.com. Why don't you explain what you do?
Yeah. So Resource Insider is what we would call a deal flow service, but it would probably be more typically viewed as a newsletter. I think what differentiates us from a traditional mining-focused newsletter is we're not just here commenting on the market and telling you how great gold is and trying to pump up some company that we're already invested in. We're focused on allocating capital into early-stage mining deals focused on private placements. So all of our members are accredited investors. You know what that is. That varies by location, but in Canada and the US, it typically means you make over 200 grand a year or you have $1 million in assets. This is just a regulation that you have to follow here. So all of our members are accredited investors. I go out, I spend all my time basically looking for private placements to invest my own money in. When I find one I like, I put my own money in it. My partner in the newsletter, Chris McIntosh, he puts money in it too. And then our investors, or rather our subscribers, they get to come in and invest alongside us at the same price, on the same terms. And we don't take finder's fees from companies. We don't get kickbacks or any of that bullshit. We're just looking for good deals. We do charge an annual fee to our members. That's where we make our sort of living capital that gets us through the year and allows us to do the research and sort of keeps the lights on. But, most of the money I made last year was from the investments we did.
Fantastic. Great summary. That's kind of interesting because I think most people spend their time rooting around trying to find good companies to put their money into, and that's the name of the game. And I think a large portion of our audience, retail, family office, high net worth, they just don't have the skills to do that. You're a mining engineer, clearly gives you a little bit of a head start, but there are some other fundamental things that people need to look at. We talked about maybe we should have a little chat about structuring issues, because as an investor, you need to think very clearly what you're about to walk into. And in many instances, and more instances than not, companies are structured unfavorably to retail investors coming in. They're kind of slightly skewed towards management. So should we look at maybe some of the experiences that you have in this space, some of the things that you've seen and the red flags that you would identify?
Yeah, so about 2 years ago at the Cambridge House conference, I gave this little presentation, and I wrote it in like an afternoon. And I was just thinking, like, when I started this, because I came from a technical background, I didn't come from a finance background, I didn't come as an investor. And when I started out, there was a lot of things I didn't know, and I learned a lot of it the hard way. And there were a few things I wish someone had taken the time to tell me before I lost a lot of money. And so I titled this talk, "How You Got Screwed in 2018." And you can still find it on YouTube.
I saw it yesterday.
A lot of the
it's
things
still there.
that screwed me. Yeah, okay. So the one that really resonated with people, and I got thousands of emails about this, and I didn't expect it, was sort of came down to how a company was structured. And my premise on this is pretty simple. Management teams, company insiders, directors, what have you, should not be able to make, boatloads of money unless they're making their investors money. And that means investors at every stage of the process, whether they're coming in early in the private placements like we do, or whether they're buying in the market. And that really, obviously it has to be a good asset. Obviously you have to do what you say you're going to do, whether it's a discovery or put a mine into production. But a lot of that beyond that comes down to structure. And a poorly structured company can basically suck every ounce of value out of an investment for a retail investor. And when I talk about structure, I basically mean who owns what, so who owns what stock and what price did they get it at. And often what we're seeing is founders and CEOs and their cronies basically are getting in these seed round financings, and they're getting in at a fraction of a penny. So they'll go raise like a few hundred dollars for them and their friends, line themselves up with millions of shares. Then they go out to the next round, and that's often people like me, newsletter writers, influencers, brokers, bankers, and they'll say, you know what, we're going to do another round at 5 cents. Why don't you come in? And then they go one kind of step further, and they do a 10-cent round. But by the time it gets to where a normal person, even a normal person that has access to private placements, can get in, it's 25 cents, right? So these guys that who started early are often getting like 100-time lift on their initial investment, or like at least a 10-time lift, and they haven't done anything. They haven't even listed the company. Maybe they just have an asset they've staked the ground. Maybe they haven't even done that. Maybe they just have an option on some fucking thing in the middle of nowhere, and the company goes public. All of a sudden, their stock is worth millions. And what do? If that thing gets cut in half, gets cut by 10 times, they're still making money. And from their perspective, it's hard to screw it up at that point. If you're the guy that goes and buys it on the market, it's almost impossible to make money because you don't have a management team that's aligned with you. You don't have a team that's kind of working in your interests. I saw a deal just a couple weeks ago where the management team gave themselves 12 million shares for $9. $9. So I don't even know what that is per share. I haven't done the math on it, but it's a fraction of a penny, and it's like $9. So this stuff happens way more often than one would think. And if you're not cognizant of it, if you're not looking for it, poorly structured company is set up to burn you right from the get-go. You don't even have a chance at success.
But that's the model, isn't it, Jamie? Come on, and thus it has been for a long, long time. And I guess here's the other secret. It may be of somewhat comfort, but everyone at every stage of the different raises that happen from shell company through to when we're paying our 25 cents has a different business model. Everyone along that chain has got the ability to screw the next guy along because they're picking it up at a fraction of what the next guy is. I mean, that's just the name of the game. So how do you even things out? As a retail investor coming in, if you assume you haven't had access to a private placement, how do you even this out? Is it just saying, I need to back a team who are prepared to go all the way, and therefore you've got to be able to identify the teams who've got no intention of going all the way? These are the sorts of things you need to look for, aren't they?
Like in a lot of ways, you kind of hit the nail on the head. Like junior mining is very literally almost a Ponzi scheme insofar that the people coming in at the lower levels are funding the people that came in earlier. So there's basically two ways to play this, maybe three. So the first is you're well connected and you get in early and you take advantage of this. What we try to do at Resource Insider to a degree is take advantage of this. We try to be early into the deals. We try to get in at cheaper prices because we're all accredited investors. We're able to get access earlier on. And is it fair? I don't know if it's fair, but it does work. And we do take more risk coming into private deals. However, not everybody has that option. So what do you do if you're not a credit investor? What if you're not wanting to do private placements? You want to buy in the market? One, look at what management got in at. So look at where they bought their stock. So I used to work for a company called Equinox Gold. Ross Beatty's the chairman. It's a $1 billion company. Didn't start out that way. And when we became Equinox Gold, we were actually called Trek prior to that. The current CEO and much of his team came in, Christian Milau, and the price that they bought in at was the same price as the financing going on. It was a $2. It was a $2 financing, and I think within a year of that share price was down to 90 cents. So they're ripping along today, and things are going well. But there was a time when the CEO of the company had put in millions of his own money and had lost more than half of it. And when you look at that as an investor, you can look at that and think, well, shit, like there's a guy that is super aligned to make this thing work, because if he doesn't, not only are his investors going to lose a lot of money, he's going to lose a lot of money as well. And those things, they don't come along very often. But if you can find those scenarios, that's a great way. And if you bought Equinox at 90 cents, I think you'd be up several times now. So, and they've had a rollback, so it's not exactly congruent to what you'd see on the market. But yeah, it would have been a great investment. And I think a lot of that has to do with the structure and the alignment of management. The other thing you do is you can look at these companies that have been beaten down. And I have a friend that does this very, very well. He finds small companies that have basically had their share price depressed for whatever reason, but that are well-funded, have a strong backer behind them, and a team with a track record of success. And he invests in them. And that's something else you can do in the market. However, I would say the caveat to that is that's getting harder and harder to do today. For anyone that's kind of watching the mining space right now, I mean, especially the last week, things have been going, the last 6 weeks, things have been going ballistic. There's these companies that, came to me initially for financing. We turned them down because we didn't like the asset or any number of things. And not only are they basically came back and said, don't worry, we don't need your money anyways. We're oversubscribed, we're up to financing, and doesn't matter what you think. And these are things that would not have even been looked at 6 months ago. And now they're financing at a premium. So it's a bit of it's a seller's market today in the mining space.
Well, it is actually. We've seen, I better be careful about timing because people can guess, but let's say in the last 4 weeks, we've interviewed 3 companies who we have looked at previously, who are uninvestable in our opinion, and they're announcing fundraisers, and I'm like, with what? You have not. Fundamentally, you have nothing. So it's difficult in times like this because the euphoria, the sentiment, the mood changes, and therefore people think these things the trajectory is only up. I don't know, maybe people's Memories are short-lived, but and that's what makes me nervous because what we try to do is help people because someone's going to get left holding the baby, right? Someone's going to be left up there at that price, and it's going to fall rapidly, and they're going to be sitting holding shares well underwater. So, do you think that this period, this mood, is going to change anytime soon? You talked about 4 to 6 weeks. Gold is high, I know, but it doesn't seem sustainable.
It's a hard question to answer. I expect a pullback. I do expect a pullback over the summer. We normally see one over the summer, and it's like we've had this initial influx of capital. This real panic buying, I guess, in a way. You've got a pandemic, you've got quantitative easing, you've got riots across the U.S. and I think starting in Europe. And if there's ever been a time where there's more tumult in the world, I mean, I don't think it's happened during my lifetime, certainly. So, gold is the sort of natural safe haven. And you even got the Ray Dalios of the world saying cash is trash. People need to own gold, things like that. So everyone's kind of piled in. But I think as things calm down, there might, leveler heads might prevail and people might think, wait a second. And maybe time to enter the general market, any number of things. So I think we'll see a pullback. However, I do think for investors playing a slightly longer game and thinking 1 or 2 years in the future, I think gold keeps going up from here. I think in a slightly longer version, commodities in general are going to be a very loved asset. I'm still very bullish on copper and lithium and all this, but I'm taking a longer view than the next 6 months, frankly.
Well, yeah. I mean, that defines you as an investor. I think we'd probably put ourselves amongst we have the same mentality on that for sure. Let's just talk about just before we get way off the topic, because I kind of like where this conversation is going. But I just want to talk about something before we do, which is private placements. You mentioned them a second ago. There are benefits and there are downsides to private placements. What's your take on them? I know you partake, but what's your view?
So I personally love private placements. That's where I do 90% of my investing. But I'll say that comes from a world that I understand very well. I started off as a technical person, but I spent 3 or 4 years of my career in corporate development in Equinox Gold. And in that time, we weren't called Equinox Gold. We started as this little tiny Peruvian Explorco, and we went from a $20 million market cap to over $1 billion market cap in 3 years. And we did that through a series of very aggressive mergers and acquisitions. And I spent most of my day evaluating different projects and looking at deals. And, we raised money through a series of private placements as well. And I got to see it from the company side. I participated in a lot of these private placements, so I got a lot of experience doing that. So I'm not a trader, and I don't pretend to be a trader. I'm not very good at calling highs or lows on the market. But what I am good at doing is looking at an asset or a company from a technical and a financial perspective, building models, running through the technical details, going through the NI 43 or JORC reports, and getting an understanding of if this project or company is undervalued and what its potential is. And I like private placements because they allow me to enter these deals at what can often be very good terms. It can be at a discount to the market price if it's already trading. It can include warrants, which are always nice to have as they sweeten the deal. But I enter these things with a longer term time frame. I typically take a 12 to 18 month time frame on anything I invest in. Some of them much longer, and that's not for everyone. Especially a lot of the deals we do are private. We've had one deal that's been private for almost 2 years now, and it's scheduled to go public in the next few months. I was happy to wait for that time, but that's not for everybody. Even the public deals, the private placements into public equities, there's a 4-month hold on the stock. Again, I don't buy really anything thinking about selling in the next 4 months, but some people have a much tighter time frame, and private placements are not for those people.
I think so you touched on something there. It's one of the first lessons I learned, certainly when dealing with Canadian projects, was the 4-month hold. It was a problem. It was a real problem because you got a lot of brokers who would buy into this, and I think some people don't understand the Canadian market. The brokers over the big brokers all run their own P&L. So everyone's got, a different model. Even the people sitting at the private placement level, a different model. and some of them would dump the entirety, or literally 4 months in one day, into the market, and the stock would struggle to recover for a long time as a result. So these are things to be wary of when you're looking at prospectuses, and to take a look and see if that is a distinct possibility. I personally like management and the brokers to have something more like 12 months. It's unusual, but that's what we demand when we walk in. If we're putting a big sum of money down, we're not going to be destroyed by someone's short-term view of the market. So we talked about private placements. I think you've got to be lucky enough to be invited in and be in a position to take part in that. So it's a kind of case of who, generally most people don't get access to that, and there's not a lot to go around usually.
Yeah, that's true. I mean, when we first started this service in 2018, it wasn't really like that, actually. Mining had been beaten up for the last year or so. And we had people emailing us and basically just begging us to give them money on almost any terms. And we did some great deals during that time. In the last few months in particular, that's not the case anymore, but I've spent years sort of building relationships with the management teams that I want to work with. We financed a lot of companies. We have a strong track record of having investors that I work with, our members, that don't do what you just said, which is wait 4 months and a day, blow out all of our stock and hold the warrant and basically bury the company. And we try very, very hard not to be in those sort of deals or to do those ourselves. So we've become an appealing choice for a lot of companies that are trying to raise capital with a retail element. I would say our real sweet spot is investing alongside corporates and funds. So when I go into a deal, I rarely want to be the biggest. I rarely want our group to have the biggest allocation in that deal. We've made a bit of a business in investing alongside well-known royalty companies, funds and private equity firms, as well as some corporate mining companies. Companies that have strong and proven due diligence teams that have the budget and the capacity to spend months on doing these deals. We're a small operation. We're me and one other person that does our due diligence, and I can't compete against a private equity firm that has a team of 10 guys and spends 6 months doing this. So I do the obvious thing, and I just make sure I'm investing alongside those people at the same price, and I'm piggybacking on the work they do. And we offer a lot of value to companies because, especially pre-IPO companies, they need something called distribution. They need a certain number of people in the stock so that they can list. And something we do is every member invests in their own account. So we'll often come in with 100 people, and it solves that distribution problem. So we've kind of become a very key part of every financing, and we invest alongside good people, piggyback on their work, and help solve the distribution issues. And kind of we've been winning, taking the gains from that, which has been good.
Fantastic. I mean, like I say, there's lots of fun and games out there, and it's probably we shouldn't talk too much about ourselves. With regards to retail and these family office groups, and what's your recommendations to them as they how they should view the market at the moment? Do you think that a lot of these, you said a lot of these people we both said who we would not finance, who we did not believe were financeable, but are getting the money? Does that sort of suggest that the market is getting overcooked? Should people be sitting back and waiting? Or do you think the prices are still reasonably fair?
So I would say that is very much dependent on a case-by-case basis. So we're doing a financing right now that is dirt cheap, and I'm very pleased with myself for getting this. But we started and locked in this deal in January, and I locked in the price, and it's taken months to put together. But we're financing at what I would consider about a third of what the price would be if they'd started today. And we're doing it in the current market. Fortunately, we kind of acted quick and we locked it in. We've got 2 other things in the works that will probably come out over the next couple of weeks. Again, they're cheap, but man, they were hard to find. I spent months and months and months looking through basically piles of shit. And, some of our subscribers said to me, they'd send emails and say, Jamie, everyone's doing something, everyone's financing. Why don't we have a deal? And, I give my stock answer to that, which is you don't need me to find you a deal. You can find any deal you want, but like you need me to find you a deal that's going to make you money, or at least has a very good chance of making money. And most of what we're seeing is not going to do that. So, I mean, we don't take a shotgun approach. We're very considerate in who we want to invest in, and we're patient to do that. We hit, probably on average about 6 or 7 deals a year. I'd say the max we could get is 10. But, I'd rather have 3 great deals than 20 mediocre ones any day. And we are 100% focused on quality. And if I get 10 great ones, I'll do them. If I get them all in 1 month, I'll do them all in 1 month. If I get, 1 or 2 and I have to wait 6 months, I'll wait 6 months. And that's how our service is designed, to be patient and to eke out these value. And I think, like, what I would say to answer your question, because I realize I've just been talking around it for the last 2 minutes, is investors who are more generalist investors, be they a family office or a retail investor, I would just recommend know what you don't know. You know what I mean? Understand the scope of your knowledge. And this is something that I think about a lot for myself, is that mining is an industry that, in my opinion, probably has more opacity than almost any other industry on Earth. There is a complete limit, or there's a gross limit of the information that's available on companies, and that has to do with a couple things. I mean, one is just the nature of the business, especially in the exploration stage. Like, I can't think of another business in the world where you don't really know what you have, you don't know how much it's going to cost to produce it, and you're not really sure what price you can sell it at. Like, where else do you see that anywhere in the world? So there's so much ambiguity as to what the actual product is and what you can sell it at. And then, mining is largely a venture space, and a venture space comes down to raising capital. And any industry where there is opacity and the need to raise capital and the ability to get rich quickly, which there is in mining, for better or worse, attracts a certain level of scumbag that you don't see in legitimate, more efficient industries. And, in many ways, the most important skill set to running a junior mining company is being an excellent liar. And it attracts excellent liars to a degree that I have not seen anywhere else. So know what you don't know. And if you don't know what you're doing, or you don't understand what you're doing, find the people that do, and be very, very careful and cognizant of bringing in experts. And I do that as well. I don't exist in a vacuum. I don't sell myself as the mining guru that can see into every deposit and project. When I look at an epithermal gold project, I bring in an epithermal gold geologist to look at that and walk me through that. If it's a porphyry copper, the same thing. If it's an operating mine, someone that has operated mines in that district, in that region. I rely on experts in the field, and this is what every major company does. This is what every serious mining investment PE firm or hedge fund does. There are no, like, the idea that there's these gurus that just know everything about every mining project is complete bullshit, and it's sold to people all the time, especially in the newsletter space where I am.
Jamie, that's fantastic. I think what we're going to do in a second is go over to the Crux Club and talk about inefficiencies and informational opacities in the marketplace. Why some newsletter writers don't know what they're talking about and are to be avoided. And also the investing in the personality of the cult. So for now, for our cruxinvestor.com listeners and viewers, thank you very much. Hope you enjoyed the show.
Yeah, my pleasure. Thanks for having me on.